Larry Tabb es director de Market Structure Research en Bloomberg. Previamente fundó y dirigió la firma de investigación Tabb Group, donde publicó extensamente sobre la estrategia de mercados financieros y trabajó en servicios de trading en Lehman Brothers. Actualmente dirige un equipo de expertos desarrollando investigación e insights sobre el mercado financiero y tecnología.
AI is going to wind up playing a much more important role in financial markets. Now, on the actual trading space and maybe the market making space, I'm not sure that AI is there right now because that market moves too fast. So you can't take the data, analyze it, and make,
Larry, thank you to be here with us right now in Risk Management and Trading Conference. It's a
Happy
pleasure.
to be here. Thank you very much.
Thank you so much. Okay, please, we start to talk about your experience, your career. Please tell us about all your experience, please.
Happy to. I started in 1980.
Okay.
I was in the back office. I was a trainee. I ran various fixed income operations. I was in the operations environment at Citi for 7 years. Eventually ran their back office for U.S. Treasury businesses. And then had a bad systems implementation and realized I like being on the technology side rather than the operations. Moved over to Lehman.
Yeah.
Was a business analyst, eventually ran their business analysis group for Lehman back in the mid 80s to early 90s. Left the industry for a couple of years, and then when I came back, I realized that I didn't really want to work for a big company anymore. So I went to Boston to start writing fintech research, and this is 96, and wrote about all sorts of technology. And that was around the time that the internet came of age and online brokerage and new trading platforms and things like that. And then went on my own in 2003 and created a business really about trying to understand market technologies and market structure. Sold that in 16, but continued to work for the guys and then who bought it. And then in 2020, basically on the beginning of the pandemic, they restructured. Yeah, really. They restructured and I went over to Bloomberg, and they offered me a great role of basically heading up market structure research, and they've made a nice home for me for the last four or 5 years.
Can we talk especially about derivatives and risk management? What do your thoughts on the importance of specialized trading and education conference?
I think, especially around risk management, increasingly as the market moves more automated, risk becomes almost as important as trading. That understanding how much risk every single trader or every single machine and how much risk the enterprise is taking becomes critical to, and how you manage that risk and how you offset that risk and how you mitigate that risk becomes core to how all of these new electronic brokers and businesses make money. Because if they don't know, because the market infrastructure right now operates sub millisecond, microseconds, in some cases nanoseconds. And humans can't digest that data that quickly. And so you need machines to understand, what am I buying? What am I selling? How do I hedge it? Where's my risk building up? How do I reduce that risk? Where do we think the market is going? So maybe I want more risk over here because I think that'll be profitable. So it's all around risk engines and how a conference or how an entity plays into that is all around education. Trying to understand the exchange infrastructure, the technology infrastructure that connects the exchanges, the trading opportunities, also how different products interrelate with each other. So if I want to, if I wind up with a position in this stock, how do I offset that? Can I offset that as an ETF? Can I offset it as a future or an option or in some other market, like for Mexico, can I offset it in something with the US or something in Europe?
Yeah.
How all that fits together is really one big math problem, and it really relies on trying to understand the infrastructure and the technology, but also the math to be able to get everything analyzed.
Larry, when high frequency trading was emerging as a hot topic in the early thousands. So it fundamentally changed the way markets operate. We can talk about that.
Yeah, absolutely. So it used to be individuals took risk positions, and I'd be a trader. I'd be focused on a couple of stocks or a couple of bonds, and I knew what was happening. I knew what was going on with the products that I traded, and if I thought, that this product was going to go up, I could take a bigger position and then sell it off. Or if I thought it was going to go down, um, with that though comes the times that I'm wrong, and and um, and when I'm wrong, I could be really wrong. And you're looking at things like Sumitomo Copper, where $1 billion trading loss, and, or Nick Leeson at Barings blew up the whole company, and so uh, with humans come the decisions that they make, which may not necessarily be right. And as we've moved into high frequency trading, it becomes more about machines and math, and it becomes less about humans, and it becomes and moving everything from a paper ticket and a human trading and a telephone, um, to automated trades. They can be analyzed much quicker. You can understand where you are. You can't stick a trade in your desk and the firm doesn't know about it, and then all of a sudden it's like how did we get this position? And so I think, um, this is where the world is going, and it makes a safer infrastructure and a much safer place of financial markets.
Machine learning and artificial intelligence is the words of the time of the moment. So
Right.
yeah, how introducing these elements at the financial world,
Well, yeah.
the well way. 'Cause-
Well, as machines do more and more, they're gonna become, I wouldn't say more sentient, but more important to the process. And so, AI is going to wind up playing a much more important role in financial markets. Now, on the actual trading space and maybe the market making space, I'm not sure that AI is there right now, because that market moves too fast. So you can't take the data, analyze it, and make a lot of that is done more statistically. But once you start adding a little bit of time in, then you can incorporate news, you can incorporate research, you can incorporate events, you start having a wider array of mechanisms to analyze value, and I think that's where AI will play for the next 5 to 7 years, and it'll start at the top. How do I analyze this research? There's 20 reports on Apple. I don't want to read all 20 reports.
Yeah.
Have ChatGPT analyze them and give me the takeaways. You're starting to see that even now, and I think and you have hedge funds that are starting to use AI to find opportunities. So I think, outside of the point of trade, I think AI is going to become very, very important.
And what do you think about the regulation? Because it's a problem
Well,
today.
regulation, that's going to be harder. I think regulation is going to be harder because you see a lot of people very afraid of AI right now. They think
exactly.
they think Terminator, and they think
Yeah, of course.
But the problem is that technology is not just new technology. AI technology that they're using is really 40-year-old. We were working with it at Lehman Brothers in the 80s. It's just the technology infrastructure and the data infrastructure wasn't up to the ability to actually do it.
Okay.
So I don't think there's any way you can put the genie back in the bottle. So the SEC wants to regulate AI and make sure that there aren't conflicts of interest between the broker and the client. I think there's some good things in there. The way that they proposed it initially was terrible, but I think hopefully we'll have some good rules and not some rules that are ridiculous. Rules that benefit investors and not stop innovation.
Okay. To conclude, what's the role that RiskMathics Financial Institute plays in the education and professionalization of financial market participants?
Well, I think, look, the markets are changing, and it's not, me playing a game of poker
Fast.
and trying to guess, what you want to do, and me create a position based upon what I'm guessing you're trying to do.
Yeah.
It's really about analyzing information and data, and we're moving from an area where it was more, this is how I feel, to an area where this is what the data says. And when you're in that environment, it's about technology, it's about math, it's about analytics, it's about connectivity, it's about infrastructure, it's about all the stuff that you can actually teach, instead of, do I think he wants to go long or go short, and I'm going to position myself so that I can second guess the person I'm trying to trade with. Those days I don't think are completely gone, but the more automated side and the more math oriented world is going to grow, and that is what RiskMathics tries to do, is get that learning curve up, teach these people how these markets work, help them learn about the markets and about how to manage risk.
This is a place and opportunity for all. Thank you, Larry, to be here with us, for you share with us your experience. Thank you so much.
Thanks, Claudia.
And
Happy
welcome.
to be here.
Welcome
Thank
to
you.
the Risk Management and Trading Conference.
Thank you. Thank you.
Thank you.